and welcome to the Linton Solutions Business Couch Talk. I have here with me today Ben Lee. Ben is the Mortgage Associate at Capton Finance. So on today's agenda, we'll be discussing about purchasing a property or refinancing your existing home loan. So Ben, we all know that the interest rate is red hot at the moment. So now's a great opportunity to purchase a property or refinancing your existing loan. But for people that are new to this, can you tell us about the whole property purchase process?
Yeah, sure. So when you purchase your property, the first thing that you need to do is to get a pre-approval, which means the bank will assess your income level to determine how much money they want to lend to you. Okay? And then after you get a pre-approval, which will be valid for about 3 months, then you can go out and look for the properties that you want. And after you have your properties, then we will apply for the formal approvals. Then the bank will issue us a unconditional approval. And throughout the whole process, we will be liaised with the customer's accountant and also the solicitors to make sure that the whole process is very smooth.
Okay, and how do you determine how much deposit you have to pay?
Well, I'll give you an example. For example, if you want to buy a $1 million property, and I recommend my client to keep the LVR, which means the loan amount divided by the value of the property should be lower than 80%. So for 1 million property, the loan amount I would recommend to be $800,000. Because if you go over 80%, normally the bank will require you to pay an insurance, which is called LMI. So then if we keep the LVR at 80%, then the deposit we need is $200,000. And don't forget, on top of that, you have to pay the stamp duty. So for $1 million property, the stamp duty you have to pay is about 40 grand. So now the total deposit that you need to prepare before you can purchase a property is $240,000.
You mentioned that you have to pay stamp duty. Are there different types of stamp duty you need to take into account?
Yes. There are two main types of stamp duties. The first one is payable by anyone, including individuals, companies, trusts, and super fund. The second one is called mortgage stamp duty, and this is only payable by companies, trusts, and super fund. If you're a natural person like me, you don't have to pay the mortgage stamp duty at all.
Okay, and how do you classify interest rate as a good interest rate?
Well, the interest rate is very low at the moment, as you're aware, and the lowest variable rate we can offer at the moment is 4.63%, and this is the lowest rate in the market at the moment. And also in terms of fixed rate, from 1 year fixed rate of 4.39% up to 5 years fixed rate of 4.95%. So there's a lot of, well, it depends on your preference. You want to go with variable or fixed. And also another thing to notice is that there's another rate called comparison rate, and this rate is a bit different from the pure interest rate that I just mentioned. This rate includes all the fees that you have to pay throughout the whole process, including the establishment fees, the annual package fees, the monthly fees, and also the discharge fees. So if you add those fees on top, then you get the comparison rate.
Okay, thanks for that, Ben. So if you are a first home buyer and you're looking to purchase a property, or you just want to refinance your existing home loan because you're not happy with it, you can contact Ben at Capton Finance, and he'll sit down with you and go through the whole process, all you need to know, and he'll be with you every step of the way.